Welcome to another program of Centrally Speaking.
The program that keeps you informed on the work and function of Jamaica's central bank, Bank of Jamaica. I'm Anna.
And I'm Sheena, and we are so happy to be with you, our regular viewers, and welcome to those of you watching us for the very first time. Anna, what's going on?
We'll leave.
Tell me about it.
Reggae girls.
Reggae girls.
One with themselves.
Them win.
Yeah.
Yeah, them are going with a bag of things.
Win up beer things.
Uh-uh.
Big up the reggae girls.
Reggae girls, pick up yourself. But Anna, I didn't know you were into sports like that.
Not really.
Really?
Yeah, I just know I stadium there.
Oh, okay. And you just like the reggae girls.
I just like the reggae girls.
All right, big up reggae girls, but we have to get off the stadium and back to the bank's business. As always, we have a great show lined up for you today, and our very special guest is Dr. Nadine McCloud, head of the Department of Economics at the University of the West Indies and appointed member of BOJ's Monetary Policy Committee.
Yes, Dr. McCloud will tell us about the work of the Monetary Policy Committee of Bank of Jamaica. But first, let's check in with our fans in the streets to see how much they know about what's going on in the economy.
What is Jamaica's current inflation rate? Is it A, 8%, B, 10 to 11%, C, 4 to 6%, or D, none of the above?
Haven't been checking that. I'm not proud of it to say, but the first one was 8%. I think it's B, isn't it?
Why do you think it's 10 to 11%?
Well, it's just a gut feeling, I guess. I just guessed it because the other options seem a bit too low.
D, none of the above.
A, about 8%.
10 to 11%,
Why do you think it's 10 to 11%?
because the country just steep.
Over 10%.
Maybe like 8% because I think it was 7% taxes. No, I think probably 8, 10 or so percent.
Isn't it 11%? I think it's at 10 to 11% right now.
Well, the inflation rate is a moving target, but the people in the streets were spot on with their answers. Anna, could you have guessed that that was the inflation rate?
I couldn't guess it, but I feel it. Feel in my pocket. Feel like when I go supermarket and they say void.
Yeah. Negative.
Before we buy anything, we check the price.
Make it extra so.
Oh, you mean?
Just can't do
I go supermarket and
and start put
void.
back. Put back. No, I'm gonna reach void.
Take time. No. From here, so with a little bit of money.
That was a street check. After the break, a discussion on monetary policy.
We're here to open a savings account for my son John. I really want him to start saving and managing his own money.
And I need for safe to visit my father in New York.
Okay, based on what you said and our risk assessment, he will qualify for simplified customer due diligence requirements. I'll need your ID, proof of income, TRN, and John's ID as well.
Okay, here you go.
Opening an account is easier than you think using simplified customer due diligence requirements, also called CDD.
Thanks for staying with us here on Centrally Speaking. We are now joined by Dr. Nadine McCloud, head of the Department of Economics at the University of the West Indies campus. And she was recently appointed member of the Bank of Jamaica's Monetary Policy Committee. Dr. McCloud, welcome to Centrally Speaking.
Thank you so much, Anna and Sheena, for having me. It's a pleasure to be here.
And we're happy to see you. So, we have this thing. This is your first time on our show.
Definitely.
And the first time you watch, though?
No, but you watch.
You watch?
No, yeah.
Yeah.
I'm a huge fan.
Okay,
Right.
good. All right, so then you must know what questions are coming next. Do you?
Yes, monetary policy questions.
No. Tell me, which high school are you repping and which parish are you repping?
Okay, high school. I'm repping Mount Alvernia High School.
Right.
Of course, in the parish of St. James.
Okay.
However, I need a plug for my daughter, who I'm going to talk about her prep school.
Yes.
They just won prep champs.
All right.
She's the girl captain on the track team. And so, Mikhail Rose.
Yes.
So I am repping Emmanuel Christian Academy. It's
Okay.
a prep school.
All right.
Yeah.
All right, viewers, Emmanuel Christian Academy. All right, so you had it partially right. We're here to talk about monetary policy today. And and the work of the Monetary Policy Committee. So, but before we get to that, tell us, what is monetary policy?
Monetary policy is essentially the set of actions pursued by our central bank to maintain price stability in the country. And this is particularly important in the context in which we're in now, where we see prices keep moving.
Right.
So the role of the bank is to control the variability in prices that we face, the prices of all the goods and services that are in our economy.
Okay.
So in other words, the monetary policy affects inflation.
Yes. Exactly, inflation, yeah. So we're trying to control that increase in prices so that we all can be able to live comfortably. Yeah.
Okay.
So evidently monetary policy is important to the Bank of Jamaica. The Bank of Jamaica Amendment of 2020 made provision for the establishment of a monetary policy committee. Why was this necessary? What is its purpose?
This act governs how the MPC operates.
Monetary Policy Committee.
Yes, how the Monetary Policy, okay, that's the acronym. The Monetary Policy Committee operates. By virtue of this act, the decision-making powers of the Monetary Policy Committee are enshrined in law.
Okay.
And so that essentially gives us independence in how we conduct monetary policy. So essentially, with this act, we're able to pursue monetary policy independently and also in a non-partisan manner. And that is important because there are instances, of course, that exist in other countries in which, in the absence of such an act, that there may be interferences from different people in the society. And so this act ensures that we are protected and we can act independently, and again, in a non-partisan manner.
There have been some controversies in relation to recent decisions coming out of the Monetary Policy Committee. Would you like to share with us the how and the why of those decision-making processes?
Okay, sure. So the Monetary Policy Committee is the fountain of authority for formulating Bank of Jamaica's monetary policy.
Right.
In terms of its structure, it's a 5-member commission. So the 3 ex officio members are, of course, the governor, Governor Biles.
Hi, Governor.
Govy.
Govy.
Yeah. Okay, good. Who is the chair of the committee, of course. And we have senior deputy governor, Dr. Wayne Robinson, and deputy governor, Mr. Robert Stennett.
Okay.
So those are the 3 internal members.
Yes.
And in terms of the appointed members, there are 2 of us. Of course.
One is Nadine McCloud.
Yes.
Dr.
And the
Nadine
other,
McCloud.
right? And the other is Mr. David Marston.
Okay.
Yeah.
Okay.
So that's in terms of membership.
Right.
Now, the MPC process, the decision-making process, is one that I'd characterize as being rigorous, highly involved, and data-driven.
Okay.
We meet once every 6 weeks. Prior to our meeting, we receive a set of documents, a huge set of documents.
Yes.
You guys work at the BOJ, so you know.
We work a lot.
You guys like documents. And these are essentially presentations and forecasts from the amazing bank staff, who, by the way, do a wonderful job in providing us with that information.
Big up REPD.
Yeah.
Yes, definitely, definitely. I had to say that, right? So these documents contain extensive analysis of different aspects of the global and local economy.
Right.
So in essence, we are privy to all dominant sources of risk, exogenous risk and endogenous risk, right, to our economy.
Meaning internal
And external to our
yes.
economy, right? All the hazards, all the hazards, and also the current state of affairs that in the global economy and also in our domestic economy. Now, strategically, we get these documents before the meeting, and that is important because that gives us ample time
To prepare.
to peruse, distill, digest, and interrogate them. So we're fully armed by the time we get to our meeting.
Right.
In our meeting, we engage in lively, edifying, and respectful discussions on all aspects of the global and local economy,
Right.
where we entertain all views. So irrespective of what your view is, we sit and we talk respectfully, and there's a lot of deliberations and back and forth in our meetings. What we also do is, based on the information that's given, we do at times, make suggestions as to, okay, we would want some additional information. We want a more microscopic view of this aspect of the economy, or this particular pattern that's in the economy that we really need to understand, that will help us in order to make our decisions, right? So we do make recommendations at times as we deem necessary.
All right, so the objective of the Monetary Policy Committee is to achieve an inflation target between 4 and 6%. Are we still being too ambitious?
We are now on a path that's characterized by more sustainable fiscal discipline. We have been able to curb our fiscal indiscipline and also achieve a marked reduction in the debt stock. And we have to give credit to not just the private citizens, but also successive administrations who were serious about making this milestone, who were serious about achieving this milestone. They were the ones who committed to the reforms, these fiscal reforms, and also accommodated different systems of checks and balances to monitor the progress of fiscal policy. So we have come a long way. Now, why the 4 to 6%? Did we just pull that out of our hat?
No, for you to tell us.
Right. No, we did not. Unconditionally, inflation isn't bad. A little inflation is associated with economic growth.
Right.
So that's important for us to know. As it's not everything that we think is bad. Inflation isn't bad unconditionally. The 4 to 6% is what we consider to be optimal.
Okay.
Optimal given our domestic imperatives, and optimal conditional on also our relatively tight fiscal space. And that target, that 4 to 6% target, was set by the Minister of Finance with the advice of the Bank of Jamaica, of course, right? So again, you need a little inflation. It can't be too hot, can't be too cold. Now let's say we were to entertain a 2 to 3% inflation rate. We just decide to, okay, we're going to borrow it from another country, that target from another country. At this point in time, that would mean that we would have to be extremely aggressive, and raise our interest rates by large margins. And that in of itself can actually stifle the economy.
Yeah.
So, we have to be careful. The 4 to 6% is optimal, conditional on our domestic imperatives and also our relatively tight fiscal space. And for now, this is our target. And I'm sure, in the future, there may be some reconsideration. It may stay the same, but who knows, right? But for now, that is what we are working with, the 4 to 6% target.
Okay.
Yeah.
So thank you. On that note, though, Bank of Jamaica has built an entire campaign around inflation rate being low, stable, and predictable. Tell us, why is it important for it to be low, stable, and predictable?
Yeah. The low, stable, and predictable inflation is what I would characterize as a necessary condition for sustainable economic growth and development. Let's just think about all the ills that are associated with high and variable inflation. High and variable inflation can reduce the welfare of people, particularly those in financially inferior positions, right? I mean, think of a household who is a net saver, and because of inflation has to dip in their savings. In the wink of an eye, a household who's a net saver can go from that position, that healthy financial position, to a rule of thumb consumer, which is one who just basically can't save, can't borrow, just consume all of what they earn, right? So that is one of the ills. There are other many ills. What we're seeing now in the labor market, high inflation essentially puts an upward pressure on nominal wages. And as I said before, we're seeing real-time evidence of that happening. Now, this is particularly concerning when you have pockets of our labor market that are highly unionized and highly labor intensive, because machines can negotiate the salaries, right? So that is particularly concerning. High inflation puts a premium, and it puts an additional cost on making investment decisions and also executing those decisions. what high inflation, high variable inflation can also do
So
is
meaning that it reduces how much you earn on your investments.
yes, and it makes it riskier. So it increases
Right.
the cost of carrying out those
Right,
investments
right.
because you're not really sure what is happening.
Right.
Right. There are many ills, but I want to highlight something else. The worst part about it is that these ills, they're not mutually exclusive. In other words, it's not like they're isolated. So you can actually
They affect each other and
they affect
everything.
each other. And so they tend to fuel each other and create this vicious inflation cycle, which raises the cost to society of actually reining in inflation.
Okay.
Right. So so those are the ills, and that is why the MPC, the BOJ, we're working tirelessly to ensure that we control those movements in prices in Jamaica, because quite frankly, Jamaicans deserve better.
The recent decisions to increase interest rates, will the ordinary man see that benefit in his accounts? The pass-through,
Yes.
as it's called.
The movement in deposit rates
Right.
plays a vital role in the monetary transmission mechanism. In other words, in how our monetary policy actions, basically has effect on monetary supply in the country, and therefore, by virtue of that, controls inflation. So the movement in these deposit rates is very important for, again,
Interest rates.
the deposit rates, right? Yeah,
Right.
right. Yeah. It's very important for the transmission mechanism, and also for the potency of the monetary policy, how effective it is, how quickly we can, see our actions become realistic on the ground, right? However, deposit rates are sticky upwards, and I'm going to explain that in a bit. Let me just finish my sentence. Deposit rates are sticky upwards, particularly in the context of Jamaica, where the distribution of power across deposit-taking institutions is not uniform.
Okay.
And also where deposit portability isn't a frictionless process. So what do I mean by deposit rates are, they are sticky upwards?
And deposit portability.
Yeah.
Right.
Yeah.
Right.
Deposit rates being sticky upwards means that they don't respond as, increase as readily as they ought to whenever the bank takes certain decisions, right? Usually they're flexible downwards. So a bank will easily reduce its deposit rate that it gives you, but in terms of, when it comes on to increasing, there's a little
delay, somewhat staggered.
Yeah, right. So that's the stickiness. And so because of that, and in all honesty, to your question, because of that, what will happen is that if you both have, deposit accounts, right, and maybe in different banks,
right,
then you may not see the increase simultaneously. Even if you have the same deposit vehicle, so you're saving your money in the same way,
right,
you may not see that at the same point in time. You may not be able to call each other on the same day at Monday at 5 o'clock and say, I've seen my increase, right?
Yeah.
So that is one of the issues that we're faced with. We're aware of that. These frictions, in other words, these obstacles that prevent us from doing our job effectively. They're on our radar, and we're working towards removing some of those frictions in the near term.
My understanding in relation to increases in the interest rate, one of the outcome or potential outcome is to mop up liquidity in the system, and thereby positively impacting the exchange rate. Has this been happening?
Yes, if you look at what is happening in the exchange rate market,
right?
Think about our history.
Well,
think about our history.
Yes.
Think about our history. We have hypersensitivity to movement in exchange rates.
Right.
It's a huge milestone for us to see this kind of exchange rate stability in Jamaica. When you think about the external climate, internal and external climate, and what is happening, that is a huge milestone for the Bank of Jamaica. I know people don't talk about it as much as they ought to, but they should, because If it's moving, if it's depreciating rapidly, we all know everybody's going to freak out. Can I say that on TV?
Yes, you can.
In this context, what we are trying to tame or put out this inflation fire.
Right.
It's way above where we want it to be, way above our upper range of 6%.
Right.
That is completely unacceptable. And we're trying to tame that inflation fire. Having excess liquidity in the system, when we're trying to tame that fire and put out that fire, is tantamount to having accelerants lying around in a raging fire.
Gas on fire. Yeah.
Because the more money you have, the more money you'll spend.
Yeah, exactly, right.
So you want to take away some of the money.
Exactly, because it becomes difficult for the bank to put its grip on the money supply, to control the money supply in the economy, right? So that would be, that's like a recipe for disaster.
Okay.
And so you are seeing the effects of our actions. They have not fully translated yet into a reduction in the inflation rate back to its target range, 4 to 6%.
Right.
But eventually, we'll get there. Eventually, we'll get there.
So Nadine, earlier you were explaining that the Monetary Policy Committee has ex officio and appointed members. You are an appointed member, so it means that you are not employed to Bank of Jamaica. So that means you can talk things then. So talk going nice now.
I love that.
Is BOJ on the right track?
I'm not employed by the Bank of Jamaica.
Yeah.
All right.
Okay.
Let me make that clear.
Yes. So we've made that unequivocally clear.
That's clear.
Yes.
The right track is the path that allows BOJ to return inflation to its target range within the shortest possible time. The right track is the track that allows BOJ to contain liquidity and maintain stability in the exchange rate market. The right track is the track that allows BOJ to navigate all the obstacles, the structural ones and the recently manufactured ones, in the transmission process. So yes, we are on the right track. BOJ is on the right track. The right track is not the do-nothing track. Let's kind of entertain the counterfactual. What if?
Yeah.
What if we were just sitting on our hands and not doing anything? There's absolutely no way our economy would be in this position.
Okay.
We may think, okay, this is bad, but it would have been dire. Things would have been worse, right? And so it's important for people to understand that we can't afford to act ex post, that is, when the dust is settled,
Right.
and inflation has decimated all our lives.
Right.
Okay.
That would have been too costly for us to come back from. In fact, chances are we don't even have the resources
Right.
to come back from something like that, right? So the Monetary Policy Committee, the BOJ, we are doing everything at our disposal. We're doing everything that we can to ensure that we return inflation to its target range within the shortest possible time. And so, yes, we are on the right track.
All right.
Thank you.
Big up BOJ.
Yeah. BOJ large. All right, so we're going to shift gears a little bit. You are the head of the Department of Economics at the University of the West Indies. All right, so I go fast. Tell me, is the curriculum designed to land your economists at prestigious institutions such as BOJ?
Bias, I love it.
Yes, the bias is obvious.
Yes, but as a member of the MPC committee, I usually have checked my biases at the door. So, in any case, consistent with models of international higher education,
Yes.
our department offers 3 tertiary degrees in economics, a Bachelor of Science, a Master of Science, and recently a PhD in economics. This PhD in economics is important because it aligns with our goal to be producers, active donors of knowledge in the Caribbean. For years, there has been a pipeline between the Department of Economics and the BOJ. So our department has been a major supplier of graduates to the BOJ, and BOJ's first port of call during each hiring cycle.
Which is right.
Right. So
I have some ideas. I think, yeah.
I know. So this long-standing relationship
Yes.
is not something that we take for granted. I mean, this kind of mutualism is rare, and we do cherish it.
Okay.
Now, many of our graduates enter BOJ with a Master of Science in Economics.
Right.
I must brag by telling you that our recent QAR, Quality Assurance Review, by external reviewers, has characterized the core component of our MSc program as one that sustains the regional and international reputation of the department. So that
sounds
is
like a big something.
big something. So yeah, we're like super excited to see that.
Alright.
However, we know we can make improvements.
Right.
We live in a dynamic world.
Right.
Things are changing. We have to change. We have to let the events inform how we teach, what we teach, and what we research. We are in the process of adjusting certain components of our curriculum.
Right.
Because it's important for us that our students or our graduates can straddle both the theoretical world and the practical world.
Okay.
Well, thank you, Nadine, for stopping by, centrally speaking. I hope you enjoyed your first time with us.
Yes.
And you have given us some very useful information, and I think you have done well to assure the public that the Bank of Jamaica's Monetary Policy Committee is doing as a yeoman's work in ensuring that the monetary policy objectives of the bank are met. Thank you so much for joining us on Centrally Speaking.
Thank you guys so much for having me.
Ah.
This was lovely.
Yes.
I should come back.
Yes. That was Dr. Nadine McCloud, Head of Department of Economics at the University of the West Indies Mona campus and appointed member of BOJ's Monetary Policy Committee. More Centrally Speaking in a moment.
Whether you're a smart farmer, street vendor, big investor, every entrepreneur, you got to wise up about your money. You have to make sure say your money secure. When you need to grow, you have access to more.
Financial inclusion means that individuals and businesses have access to useful and affordable financial products and services that meet their needs.
Access to more money, more credit, whatever your business needs. When you work hard for your money must work for you.
On this week's episode, we spoke with Dr. Nadine McCloud, Head of the Department of Economics at UWI Mona and appointed member of the bank's Monetary Policy Committee. Here are the main points from the discussion. Let's get into the fast facts. Number 1. The Monetary Policy Committee is the foundation of authority for formulating Bank of Jamaica's monetary policy. Number 2. The MPC consists of 5 members. 3 are from Bank of Jamaica and 2 are external independent of Bank of Jamaica. Number 3. The Bank of Jamaica Act 2020 is essential for the MPC to secure the trust of the Jamaican people. Number 4. BOJ is on the right track. The right track is a path that allows Bank of Jamaica to return inflation to its target range of 4 to 6% within the shortest possible time. And number 5. The University of the West Indies offers bachelor's, master's, and PhD degrees in economics. And that's it for our Fast Facts. That's our program for this week.
Follow us on Twitter at Central Bank JA or on BOJ's Facebook page. You can also visit website www.boj.org.jm.
We also invite you to send in your questions on Twitter or Facebook.
And of course, watch Centrally Speaking again next week, same time on this station when we have another special guest.
Thanks for watching.
I'm Anna.
And I'm Sheena.
See you next week.
Centrally Speaking is a production of Bank of Jamaica.